And in our top business story, authorities in the UAE are discussing changes to the country's banking law, which would give the central bank a role in determining monetary policy. According to a local report, the comments were made by the central bank's governor on Monday. Existing law grants the central bank control over interest rates, but this is negated by the fact that the UAE dirham is pegged to the dollar. The UAE is currently overhauling its banking law dating back to 1980, with the governor referring to at a greater role for his agency in directing UAE policy. International bodies such as the IMF have recommended independence for the central bank, while upcoming changes stemming from Basel III rules are also forcing regulators to examine existing structures and practices. While the planned changes would give the UAE central bank a greater degree of independence, core strategic decisions would likely remain in the hands of the government. The central bank currently governs commercial banks and money supply, with other agencies also playing roles in maintaining the health of financial markets. At the end of April, cash in banks' current accounts at the central bank totaled 23.1 billion dirhams, and certificates of deposit held by banks were worth 90 billion dirhams, according to the central bank data. Dubai private sector companies indicated a modest rebound in output growth from the 18-month low recorded during April, according to the latest Emirates NBD Dubai Economy Tracker report. The latest survey also pointed to a slightly faster expansion of incoming net new work, while modest job creation and positive sentiment regarding the business outlook was sustained. Of the three key subsectors monitored by the survey, construction was the best performing in terms of output and employment growth, largely reflecting a sharp and accelerated increase in new development projects. Commenting on the findings, Tim Fox, the chief economist at Emirates NBD, stated that May's improvement was very encouraging and it illustrates the resilience of the Dubai economy in the face of ongoing headwinds such as the strong dollar. He added that it appears to be consistent with other tentative signals that suggest that Q1 may have been the low point for growth during the year. Business activity and employment was recorded at 57.6 in May, picking up slightly from 57.2 in April, and remained well above the 50.0 threshold that separates growth from contraction. Construction remained a key engine of output growth, with the respective index at 62.7, up sharply from 59.6 in April. Wholesale and retail experienced a moderation in activity growth, down to 56.5 from 58.4, while travel and tourism underperformed to a less extent in May, up to 54.1 from 52.3 in April. The sustained business activity growth contributed to a moderate increase in private sector employment during May, with net job creation now being recorded for almost 3.5 years. The UAE has the potential to become a world-class leisure destination, but it must first overcome several obstacles, according to professional services consultancy PwC. The government aims to double the number of tourist arrivals over the next 6 years to more than 30 million visitors a year. To achieve this, it has to set out ambitious plans to expand its tourism industry by adding huge new theme park developments being built near the Jebel Ali Free Trade Zone by Dubai Parks and Resorts. The theme parks, including Legoland Dubai, are expected to generate 2.4 billion dirhams in revenue in their first year of operations and create 5,000 new jobs. The linked theme parks are due to open in October next year and will include Motion Gate Dubai and Bollywood Parks Dubai, and are expected to collectively draw 6.7 million visits in the first full year of operations. According to a new report released by PwC, there is a gap in the regional leisure market that can be filled by the UAE's developing leisure sector. It added that regionally, there is very little competition at the moment, and within 4 hours flight time, there is a potential market of some 3 billion people in Asia and on the subcontinent. According to the report, the UAE has the potential to be the regional version of Orlando, Florida. The U.S. city is home to Walt Disney World Resort and its related theme parks and activities which attract about 60 million visitors a year. The report concluded by stating that if the UAE takes a holistic approach to its destination management, offering an Emirates-wide vision and coordination, it can exploit its unique geographical location and deliver high-quality attractions. And DAMAC Properties has revealed that it has awarded more than 2.8 billion dirhams in construction contracts in the first 5 months of 2015. The awards include the main works packages on more than 1,500 villas within its community, Akoya Oxygen, 3 new apartment blocks at Akoya by DAMAC, and the main contracts for 3 of its hotel apartments projects, DAMAC Maison Privée, Naya Vantage, and Naya Celestia. Commenting on the contracts, officials from DAMAC Properties were quoted as saying that the awards go a long way to showing the company's confidence in Dubai real estate market, and they will ensure a strong pipeline of deliveries.